So I'm here with David Morgan of silverinvestor.com in our follow-up currency countdown reports. And of course, this has been a huge week. Let's talk about the euro right out of the get-go.
Bottom line is everything that's flying around the internet and the mainstream news right now is that the default situation for Greece is more or less inevitable. There's a question about, why are they being bailed out? And of course, it's to save the system. But deeper than that, what's interesting is that a lot of the northern banks, like the German banks that are fairly solvent, especially relative to Greece or Italy or Spain, bought a lot of this now considered junk bond status or Greek high yield bonds. And by bailing them out, they're helping the banking system retain those yields, at least for a while. But as we've talked about on your show many times, Tracy, this is something that cannot be rectified. You cannot fix a massive debt problem by increasing the debt. And that's the only solution these bankers are coming up with. In the meantime, this Dexia Bank has failed, which is one of the mainstream money center banks in Europe. And supplies basically has a lot of this debt, not only Greek debt, but other debt from other European states. And so the problem continues to get worse and worse and worse. So again, I'm along with CNN Money as taking their quote, Greek default is just a matter of time.
So then, if you do believe that Greece is going to default, do you think this is going to spill over to Italy?
I do. I think it's a series of dominoes, more or less. For example, let's say that Greece opts out, or they're given the option to opt out and they go to the drachma or something. Then I think what would happen, possibly and probably, is that you'd see Spain and Italy go down next. They go back to their respective currencies. There's a rumor, and it's been looks like a good one, and I don't like to put rumors into the discussion, but that Germany has already made contingency plans to go back to the Deutschmark. And is that true or false? I don't know. But that is a possibility. Certainly Germany says, well, rather than them opting out and going back to their respective currencies, we'll opt out and go back to ours. But it's a mess.
And how is it going to affect us here in North America?
Well, that's a great question. And it will affect us because a lot of these banks are so interconnected because they buy each other's debt. And there is debt on the books in North America. How much, I haven't had time to research, but it will affect it. And it could affect it even if there was no debt held by North American banks, and there is. And the reason for that is this whole thing is a big vote of confidence. How much confidence do you have in the system? And the system is global, and the system is all these banks, again, being interconnected. So if you go back to the 30s and you look at the Creditstalt Bank in Austria that went down, at the time it didn't look like it was a big event, but that's basically was the catalyst or the tipping point that brought on the Great Depression. At least that's what most scholars will show you or tell you. I'm in that camp. So again, this could be one of those things that, well, they went back on their own currency and things will work out. And I'm not saying it's going to, inevitably unfold and unravel like the 30s did, but if you're clear and objective about what we're really seeing today in the global economy, things are contracting. The wealth creation is not increasing. The only thing that's increasing is the amount of paper that's being printed. But this is not stimulating the global economy. And that's what has me so concerned, along with many other people.
The U.S. banks, any safer than the European banks?
Well, I think, generally speaking, no. On a case-by-case basis, yes. If you really drill down, there's probably some safe banks. In fact, Martin Weiss does a safe bank report that I think you can get for free. There are a few solvent banks in the U.S., but these big money center banks, they are really, really in trouble. I mean, you look at the derivatives exposure for JP Morgan, HSBC, Bank of America. This is troubled times. And again, there isn't any real solution coming to the fore that says we're going to fix it. In fact, again, at the risk of sounding like a broken record, the solutions that are being proposed are non-solutions, unfortunately.
In our In our episode on gold's parabolic rise, you mentioned that we were just in a micro bubble, and as you've seen, gold and silver did, gold and silver, of course, did decrease a little bit for a short period of time, and I'm guessing it's time to get back in. Can you tell me what your perspective is on gold and silver today, since it's changing every minute?
Yeah. Well, thanks for being clear. Sometimes I misquoted, and communication is key. Yeah, I said it was overbought. I probably said mini bubble, which I think is fair. It certainly isn't a big bubble. What's the bubble, of course, is the debt bubble. But yeah, I actually was trading. As you know, Tracy, sometimes I keep a core position, roughly 75%, which I basically don't touch, and then I trade around 25%. Of that 25%, seldom is that all in, but sometimes it has been in the past. Your question, the answer is, fundamentally, things have only gotten better for gold and silver. Again, let me repeat that because it bears repeating. Fundamentally, the case for gold and silver are stronger now than they have ever been since I have been alive. Now, that doesn't mean that gold and silver are going to rocket from this point. In fact, I'm going to do an update for our members in the next day or two outlining what I expect, and I put it in the last Morgan report. And I know, Tracy, you read it. I don't know if you had time to read this issue. It's just been out a couple of days. But I said that I think it's going to probably take probably 3 months or so. Markets that waterfall decline like gold and silver have done recently, regardless of the cause, usually psychologically break the market for a while. So what I'm saying is it takes time to rebuild confidence, even in the metals, for them to form a bottom, build a base, and start coming back up.
David, we are definitely in a brave new world, and I thank you so much for joining us again this week on Currency Countdown Report.
Tracy, it's always a pleasure. Thank you.
Thank you.